two key events will provide bookends for the Canadian market in April. First off, we're expecting wide-ranging tariffs will be announced by US President Donald Trump on Wednesday, April 2nd. Meanwhile, we've got the federal election here on April 28th. Right now, Purpose Investments is offering what it calls an alternative to traditional banks and advisors with its acquisition of the investment firm Steadyhand. Let's get more on the markets first, though, from Som Seif. He's founder and CEO of Purpose Investments. Thanks very much indeed for joining us.
Great to be here and great to see you.
Always great to see you.
Yeah, likewise.
What's top of mind for you right now, the Canadian election or tariffs?
It's pretty hard to kind of say either is more important, but they're both pretty critical. And I think actually very much aligned in kind of what we're trying to accomplish over the next couple of years in this country and what we have to do. I think that the importance will start with the election. I think this is a really great opportunity for Canadians to really focus on the kinds of actions that we want to see over the next number of years and the next couple of decades. I mean, politicians come in and, ultimately they're building for 10, 20, 30 years and the future state of our country. And I think this is a great opportunity, and we've got to basically make sure we choose people who are going to get back to action and building. And so there's a really big opportunity, I think, for us, and I think for Canada's long-term thing. Whether or not, we'll have a meaningful impact on the Canadian dollar in the short term, on, Canadian stocks and industry in the very, very short term is one thing. But I think more than anything else, it's about what are we going to do over the next 3, 5, 10 years. I think when you talk about the short term, talk about Trump and the tariffs in the United States, and not just in Canada, but global now. And, I think that's going to be a really big thing that everyone needs to be worried and thinking a lot about, as we are. And we're all, as investors, we're focused on, how do you position, how do you make sure that we cut out the noise and focus on the long term as well? Because I think that's the only way to win in all of these kind of volatile periods.
It is interesting how our market has outperformed the U.S. this year. You'd think our stocks would be selling off because we're so trade dependent.
Well, look, things are nonlinear always, right? Oftentimes people will say, well, this happens and then therefore this should happen. And the reality is that, oftentimes there's a sort of second derivation of it. Sure. And so what's the situation? Of course, tariffs, if it was about just bullying Canada, which was the original rhetoric, it would be very bad for Canada. But this isn't about just bullying Canada. This is about a global trade restructuring that the U.S. is trying to go through. So, what you're really focused on is how does Canada's position in the global sphere work? How does it change in terms of its positioning against the U.S. markets? And what's the U.S. repercussions of this? And what you're seeing now is higher increased recession risk in the United States. If you look at the markets, Europe, of course, has been outperforming because of it's getting its kick in the butt, and Canada was still outperforming the U.S. Canadian dollar was doing well, but now last week we started to see some of that reverse, because the seriousness of global trade could have not on just each of the local markets, but also on the U.S. and the recession risk that it's going to have in the future.
We know there's always, you can come out with political slogans towards autarky, which is economic self-sufficiency, and say we in Canada, we stop being so dependent on the United States. But it's not simple to do, is it, in an interconnected world?
It doesn't happen overnight. There are motions that you have to take over the long run, but it doesn't happen overnight. And so the reality is that we have to sort of figure out what we're going to do in this country. So Canada has to get its sort of trade and structure in place and get itself back to sort of self-dependence in many ways, not just relying on others. And then second is, I think, ultimately it is about restructuring our long-term vision of how industry is going to work, how we're going to ultimately drive activity and, kind of being an owner of IP and an owner of our businesses as opposed to just a consumer and an exporter. Yeah. I think those are the big things. I think more than anything else, if you actually look at it, some of this actually could be why the markets are sort of somewhat positive or looking at Canada differently is because if you look at the things that could be affected, materials, energy, mining, these companies, these industries are hugely still important to Canada, and we could ultimately see a big opportunity for growth.
But they're selling commodities, and the definition of a commodity is it trades just on price. Yeah. And there's always going to be somebody willing to try to undercut you. So do we need to shift focus here and just be talking about intellectual property, as Jim Balsillie, formerly of BlackBerry, would say?
I think it's an and. You need to be doing both. The reality is that their commodities are ultimately businesses around them, and the world runs on those commodities today. The intellectual property of the future is ultimately still what the world is migrating towards, and we've seen that being a huge win for the United States over the last 20 years. It's the kind of the missed opportunity in all this is that the U.S. has won in intellectual property development against the global world, which is focused on, call it, employment focus, and like, let's get jobs and all the rest of it. I think that Canada should be focused on both. We need to still fuel the world's power and the fuels kind of consumption and all the things that commodities are really critical, and we can make great businesses, and we're really good at that. We also have to focus on owning the intellectual property of our research and development and the things that we're really good at as well.
I think about Sweden. They're able to build their own fighter aircraft. Now, I know this is being very simplistic, but why can't Canada do something like that?
Well, I mean, we could. We tried, and then it was killed. Exactly. Yeah. I think Canada can do anything it wants. We have some of the smartest people in the world. We attract some of the best researchers in the world, and we ultimately can do anything we want. We just have to choose to do it, and we have to choose. We can't do everything. We have to choose the 2 or 3 things that we're going to be excellent at. We've been great at mining. We've been great at energy. We have not been great at, sort of executing it in-house and all the rest of it and creating barriers. But we can be anything we want in Canada. We just have to choose that we want to be, leaning into it, and we need to get out of our own way and basically developing it.
Som, tell us about how your business is going to change with this acquisition of Steadyhand, because you do say we're working on a new type of investment platform.
Well, first and foremost, no. I think that our business, I've set this whole company up to help the future of advice. We believe that advice is really critical for Canadians. We think that Canadians need access to great advice, and we are entirely focused on how do we help advisors ultimately win, help them basically within the investment products, whether it's with the infrastructure and technology, and we've invested heavily in that. I think the Steadyhand opportunities are a really, really interesting one. I have been a huge fan of Tom and what Neil and the team over there have been doing for some time in terms of Steadyhand and creating a really great organization, and the opportunity to help them really expand that. We think that what they do for Canadians is really important, and we think there's a huge opportunity to help them expand that so that more and more Canadians get access to it. But more importantly, what we really care about is we spent tens of millions of dollars on supporting the infrastructure of how to deliver really great advice. And more importantly, the advisor-client experience. And what this gives us opportunity is that Steadyhand can really leverage off of that and really migrate towards how do we get to better planning integration with portfolio management, sophisticated portfolio management. And so, I'm a huge fan of what they've done, and we're a big fan of what advisors are doing across this country, and we just want more and more of them to support the marketplace and succeeding and helping Canadians ultimately meet their goals. And
can you remind me, what is Steadyhand's basic model? Is it fee-based, or is it commission-based, or how does that work?
So it's a traditional investment management, portfolio management. So they get paid on the advice of the portfolio construction. So it's sophisticated in the investment management side of things, the portfolio construction, and then they basically give that in a very low-cost way to the customer. So what's really important is that they support Canadians who have $50,000 all the way to several millions of dollars. And the reality is that's a sort of a segment that has, for the most part, been treated pretty poorly by the Canadian, call it, financial institutions. If you go into a bank today, the bank branches generally is where you get service there, and the offering there is pretty expensive and pretty low quality in terms of advice, and it's proprietary and all those things. I think this is a huge opportunity to provide sophisticated advice, low cost, and with good value-added, call it, advisor support and structure at scale for smaller clients.
Sorry, but do Steadyhand planners, do they get commissions from mutual fund companies?
No.
Okay.
No. It's 100% structured in terms of a fee-based model with the client.
Oh, I see. Okay, well, Som, thank you very much. Oh,